What's a case interview like? How should you interact with your interviewer? How long should a case interview take? These are some of the questions that we get as people are preparing for their case interviews with Bain. In this video, you'll get a chance to see someone set up their analysis and their framework, work through their analysis, including doing some math, and synthesize their recommendation at the end. We hope this interview example helps you feel prepared and confident heading into your interviews. So let's take a look at a case interview.
Hi, Eric.
Hey,
great to meet you.
Great to meet you.
So glad to have you here today.
Excited to be here. A little nervous, but excited.
Yeah. How are you doing just more generally?
I'm good. Yeah,
Yeah?
office is beautiful. Everybody's been great so far, and just, excited to get going with the case.
I'm so glad. Well, I'll be the one pushing us along. Don't worry if I finish us up, move us to another area. I'll be in charge in terms of the time management.
Good to know. Thank you.
Great. So should we jump in?
Yeah, let's do it.
All right. So let me give you a little bit of the context of the case. Now, one thing I love about this one is I do all consumer products and retail work for, my normal job here at Bain. And so this is one of those consumer products types of cases, and it's based off of a real Bain case.
Okay.
And so let me give you a little bit of the situation. We're going to blind all of the company names for the purposes of confidentiality. So our client is Foodco. They're a multi-billion-dollar client that has leading brands across many different food categories.
Okay.
Right now, they've narrowed in on the alternative milk category. They believe it's growing quickly, has some attractive elements to it. And alternative milk you can define as anything that's non-dairy plant-based. So things like almond, oat, coconut, soy, you name it, all goes within alternative milk.
I think I used almond in my latte this morning. So.
There you go. So you're familiar.
I'm ready.
Already. They've partnered with Bain to determine how they want to enter and whether or not they think this asset is the right way to enter the space.
Okay.
Because they're pretty familiar with this market, they've narrowed in on a target named Smilk.
Okay.
And Smilk, in terms of its profile, it's a pretty attractive profile. That's why they're interested in it.
Okay.
To give you some facts on it, it has, over the past 3 years, been doubling its profit each year.
Oh, wow. That's impressive.
Very, very strong performance overall. It has about 6% share of the alternative milk market and is expected to grow to 8%.
Okay, so modest growth.
Right. Now, this Smilk has been able to expand across Europe and the U.S., but Foodco for this particular piece of work is only interested in the U.S. market.
Okay, good to know.
So we'll be focusing on that. Now, here's the real complicating element of it. They expect that Smilk should be able to increase its profit by 6x over the next 5 years.
Okay.
So as we think about this overall, I'd love to have you tell me a little bit about how you would approach assessing this question. And in particular, we need to understand whether or not this 6x profitability growth is feasible.
Okay, great. I think I understand the situation. Can I ask a couple clarifying questions?
Sure, absolutely.
Awesome. I imagine they have different business units like almond, soy, oat. Any gaps in their portfolio that I should be aware of?
Not that it's relevant to the case currently.
Gotcha. And then finally, just in terms of understanding, does Foodco have any other specific acquisition thesis that I should be aware of, any metrics that they want to hit, or is it just broad assessment, get our opinion, whether it's good or not?
That's a good question. So mostly they're focused on whether or not they can achieve the profit.
Okay.
But what's equally important is thinking about share and the trade-offs between the two of those.
Okay, awesome. Well, I think I understand the problem. Excited to get into it. You mind if I take a couple moments to
Please
structure
do.
my thoughts? Awesome. So as I think through this problem of how to assess Smilk from Foodco's perspective and think through whether the profitability target is achievable, there's really 3 buckets that I want to look into. First is the alt milk market itself.
Great.
Second is a deep dive into Smilk and their internal operations.
Perfect.
And then finally, I have some other considerations and risks that I want to look at.
Great. Before we jump into your framework, can you tell me why you thought about these 3 as being the main buckets that you wanted to focus on?
For sure. So I wanted to first start looking at the market because I think a core tenet of any good acquisition or investment is that the asset is positioned in a market that is favorable, growing, has tailwinds and headwinds, etc. Then, once we feel comfortable about that, that's a large and growing market, Smilk is well positioned within it, making sure that Smilk has everything that they need to be able to succeed, capture share, grow revenue, decrease costs, which will ultimately help us to improve profitability.
Great.
And then finally, these like other risks or considerations are more kind of deal specific in terms of, how might we finance it?
That's great.
What does the balance sheet of Foodco look like? Can they bring on debt? Because I think that will impact what the ROI could look like moving forward. In terms of opportunity cost, I know that there's zeroed in on Smilk right now, but are there perhaps other ways that they could enter the market? Should they do a joint venture with somebody? Should they just build it organically themselves? Or could there be a better target?
That's great.
And then finally, with any acquisition, I think making sure that we don't lose sight of culture to make sure that it'll fold in nicely and that transition plan would go smoothly. But unless there's any other questions on kind of how I've thought through this, I think I want to start with the initial hypothesis that, yes, this asset would be a good acquisition for Foodco to make, and that they will be able to achieve the profit target of, just to remind myself, 6xing in the next 5 years. And so in order to start testing that, would really start to looking at this first bucket in terms of what the overall alternative milk market looks like, and ideally broken out by segment.
Perfect. Is that where you'd like to start?
Yes, it would be.
Great. And then after we look at that, what are the most important elements within Smilk?
So within Smilk, what I would love to understand is looking at their historical performance broken out ideally by business unit. The reason I want to look at that is to get a sense of how they've gotten to where they are today. I know that they have doubled profit every year for the past 3 years, which is really incredible growth.
Right.
And obviously there's multiple ways that they could do that. They could be gaining market share, they could be introducing new products, or they could be cutting costs, or some combination of all of that. And I think how they've gotten to where they are today will give us a good insight into what future growth opportunities they might have and help us to get a really good understanding of whether or not that 6x target is achievable.
Fantastic. I like how you're thinking about it. I also like how you're bringing it back to the objective around this 6x. So let's start where you suggested.
Okay.
And I have a slide here that gives you a picture of the market. And I would love for you to tell me, what does this tell you about the dynamics of the milk market?
Okay. If I could just take a couple moments to orient myself. So what I'm seeing is a chart of kind of the U.S. milk sales over the past 10 years forecasted into the future for 5 years from now. And the first thing that immediately jumps out to me is you can see that the overall market has been in decline and forecasted going forward, it's at best going to remain roughly flat.
That's right.
So from the overall perspective, not great. But what is exciting for Smilk is when you do a deep dive into the alternative milk segment, that is actually expected to grow and quite considerably. Over the next 5 years, a low double-digit CAGR is actually pretty exciting to me. And so feeling good about that and looking closer at the data row, I'm seeing some numbers that we can manipulate in order to get a sense of exactly what the size of the alt milk market is today and then what it's going to grow to 5 years from now, which I think will be a good starting point to help us understand the feasibility of the 6x target.
Agree. Let's go ahead and do that.
Okay. So in order to combine these variables, I'm thinking we first take the alt milk share today, multiply that by the overall market size, which will give us the alt milk market in dollars today and 5 years from now. Putting some numbers, 19 billion. Is it okay if I round that?
Yes,
okay.
please do.
19 billion times 11%. That is roughly 2 billion, 2.1 billion. So that is today. And then in 5 years, we are going to 19.2 billion times 20%, which is 3.8 billion, but I'm going to go ahead and round that to 4 billion. So like I said, we now have a better sense of what might be achievable if Smilk just kind of maintains market share, maintains status quo going forward. It's exciting, it's 2x, but it is a far cry from their 6x target. And so to update my hypothesis, I still think that there is reason to believe that this would be a good acquisition for Foodco. However, I'm more bearish about the achievability of the 6x profit target. In order to get a better sense of that achievability, I would love to look at any internal financials that we have from Smilk to see how they've grown over the past.
I'm so glad that you asked and had us go there, because I'd love to think a little bit about the feasibility of this share gain. Now that we've isolated that they will need to gain share to reach their targets potentially, or other levers, I'd love you to tell me a little bit about what this competitor market view tells you about their ability to gain share.
Okay. Just orienting myself quickly. So what I'm seeing, like right off the bat, is not too long ago, only a year and a half, there weren't that many players, and Smilk was still very nascent. But over time, Smilk has moderately grown its market share. Seems like they've plateaued very recently, and they are the smallest player in an ever-increasing competitive and crowded market.
Correct.
And then just interpreting the names here, Large Snack Co. looks like the market leader, which could potentially be not great for Smilk if they're going up against somebody that is very well financed and very entrenched in the market. And so from looking at this, I'm feeling even better about the view that the 6x profit might not be achievable, simply because I don't see an easy win here in order to gain share. However, I'm not going to give up. I think some things that could help them achieve that, if any of these competitors are potentially acquisition targets, and Food Co. could do a quasi like roll-up strategy.
That's great.
That could be a way.
What else would you need to know about Smilk to gain confidence that they could gain share?
I think in order to gain confidence about how they could gain share, I'd want to know a couple of things. One is, I guess I would bucket this kind of external and internal considerations. Externally, I would love to know how customers view them. Are they differentiated in any way from a product standpoint or a capability standpoint, such that they could steal share? And then second, from the internal perspective, I would love to know what products they offer today. Are there any untapped geographies that they're not in, for example? Are there any products that competitors offer that they simply lack? And then I know we're focused in on grocery, but there's always opportunity for partnership. There's always opportunity for selling your brand outside of grocery stores, like coffee shops, airport lounges, etc. So
that's great.
So to update my hypothesis, I still think that this is a good asset. So I feel good about the acquisition thesis there. However, I'm increasingly bearish on the ability to hit that 6x profitability increase over the next 5 years. In order to feel more comfortable about that part, I would love to look internally to Smilk in terms of their financials to understand how they've grown, and like you just suggested, are there any opportunities that they could kind of untap potential to steal share?
That's great. I think we're going to explore both the internal and the external that you mentioned. So first, let's go to the internal. I have some data on the company.
Okay.
Could you first orient me to what you see in terms of the data you do have and what you would need in order to answer this 6x profit question?
Okay. So what I'm seeing, like you said, we have financial data for Smilk broken out from their U.S. business and their European business. And looks like it's a little bit of a puzzle to solve in terms of some blanks that we need to fill in.
Love some logic games.
Yeah, love some logic games. And so what I'm seeing in terms of how to, well, just to react like very quickly to this, it's interesting that the U.S. business is only a quarter of overall profitability compared to the European business, which is
great observation.
Which is important because we're only focused on the U.S. and from Food Co's perspective. The second thing that sticks out to me is there's quite a delta in terms of the margin between the two geographies, and so to keep this on our radar moving forward, would love to understand why that delta exists, and if there's any way that we could potentially bring the U.S. business up to snuff with what they're seeing in Europe. But to get to your question in terms of how to fill this chart out, what I'm seeing is we have revenue today, and we have the margin, so we can back solve for this profit figure right here. And then we know in the U.S. what the market size is today. We know what their share is, so that'll give us this value. And then same approach, knowing the margin, we can back calculate what profit is. That'll leave this hole, and then we can kind of fill in from there.
Now, before we do that, going through that process, what is it going to tell you about whether or not they can achieve that 6x profitability?
So what it's going to tell me is it's going to tell me what profit is today. And then we know what profit is today. we know what the market is expected to be 5 years from now, what their market share is expected. So that'll give us revenue.
Right.
Then if we multiply by a margin, that'll give us what, if everything goes as we're forecasting, no changes in margin, what profitability would be.
Right.
Just looking at these numbers, if we do that, like we said from before, with no material change in share, they're only expected to gain 2 points.
Right.
That's not going to close the gap unless we see some sort of margin increase. Like that's also not going to close the gap. But I do think that there are still ways that we could achieve this. One would be if we could increase the profitability of the US segment to get to Europe. That'll get us some of the way. My intuition is not going to get us all the way, but there also could be some margin improvement that you would see from synergies rolling into Food Co. I would expect that distribution, logistics, et cetera, would get cheaper.
Right.
Also, purchasing power of a really large company could help get the cost of goods down for these different types of milks, materials, plastics, et cetera. And so I'm kind of imagining a sensitivity table to where
Interesting.
if we know what the market would look like in the future, there's some implied share that they would have to get to, assuming profitability remains the same, and then vice versa. If we assume no share gain, but calculate what profitability the margin would need to increase to hit the target, that'll help us understand the extremes of the sensitivity table and then help us get a better sense of could reality exist somewhere in the middle.
Great, and bound the potential outcomes.
Yeah.
I really like how you're thinking about
Yeah.
this, especially because there's a lot of things that could go
Yeah.
right to reduce costs overall and help them hit their margin targets. How are you thinking about the trade-offs, though, some of the headwinds they might face?
Great call out. There are natural tensions between trying to increase market share and thus increase revenue, as well at the same time as trying to decrease costs. On one hand, you usually need to invest for growth, but on the latter situation of trying to improve profitability, that oftentimes comes with finding places to get better, more optimized with your budget, and maybe requires less investment just to protect that margin.
Yeah, so glad you're acknowledging that. Why don't we go ahead and do the exercise you suggested so that we can really get our arms around what the real potential might be to increase profit?
Is it okay if I just write on?
Yes,
Okay.
please do.
So revenue is 320 million, profit margin is 15%. So to arrive at this profit figure, just 320 million times 15%, and that'll give us the dollar value.
Great.
So 10% of 320 is 32, half of that is 16, which means that this is 48 million.
Great.
What I said earlier for the US business, we know that the market is 2 billion today, and they have 6% share, so that is 120 million, which means 320 minus 120 is 200 million. We know that if this is 10%, 10% of 120 is 12, and then 18% of 200 is 36 million, which checks because 12 plus 36 is 48. So now that we have all of this mapped out, we can put some specific numbers to what their actual profit target is.
Great.
And so if they are at 12 million today, and they need to 6x, that means they need to get to 72 million. And so, like I was saying, in terms of understanding how they might get there, we know that there's going to be some latent growth, assuming they hit their market share targets and the market grows like we expected.
Right.
So I can figure out what that contribution would be, and then the delta would essentially come from the sensitivity table that I outlined. Does that sound like a plan?
Great.
Okay.
Let's go ahead and do it.
So we know that, go ahead and transfer over here, market 5 years from now is going to be 4 billion, and they're going to have 8% share, which translates to $320 million in revenue. And then, so just from that, if they keep the 10% profitability margin, that means that they are getting to 32 million. So that's good, like we've already talked about, but it is still
Far cry.
$40 million short. we need to more than double this. And so let's go find how we might do that. And so from the revenue / market share perspective, and then looking at it from the profitability perspective. So when I look at how much they would need to achieve, we'll solve backwards here. So we know that they need 72 million. If we are going to assume the 10% profitability, that's simple math. We know that they need to grow to $720 million of revenue.
Right. At that profit level.
At that profit level. That seems like quite a bit. If we go ahead and figure out what that implied market share would be very quickly. So we know it's a 40, 72. So that would be 1, 4, 3, 2, 18. 18% market share, which is triple from what they are at today, which is a lot to gain, especially since they plateaued out over time.
they did.
So again, I think we're going to need to dip into this profitability perspective.
Yes.
And so what I'm thinking about here is we'll assume that they maintain share that we're forecasting of 8%. So we know that they'll be starting with $320 million of top line. Again, we're trying to solve for this 72 million. And so now it is just figuring out what the margin is. And if I do this, it looks like it is just higher than 20%, but to put some math to it, 32, 2, 64, and that leaves us 8. So it's like 22 to 23%.
Great.
So 23%. Again, that's big, but if we look at the European business as potentially where we might get to, so upper bounds, 18%, call it 20. Maybe if we get some synergies from Foodco, I think we need to do some further analysis to see if we can fully unlock this 23%.
Right.
But I'm now getting a little less bearish than I was originally, so I'm going to update my hypothesis that this is a good asset. I like the market that they're in. I like the growth potential from the profitability perspective, the lever that exists particularly here in terms of matching the European business. And I think a combination of these two could make the 6x profit target achievable. We might not get all the way there, but I think we might get pretty close, which I think would be exciting to Foodco.
Right, could still make it attractive, and
Yeah.
and I like your sensitivity because you don't need it to be on either end of these
Yeah,
extremes.
exactly.
But we are asking for a lot to go right: share gain
Exactly.
and margin.
Exactly.
So why don't we take a look at some of the external factors that you had mentioned? So I'd love you to take a look at this and tell me what it tells you about the competitive market.
Okay. So there's a lot of information here. If I could just orient myself quickly. So what I'm seeing is Smilk compared to, looks like a lot of the major players from this early market share
That's right.
map that we looked at earlier. And what I'm seeing is first validating that Smilk is at where they are today. They're a smaller player in the market, and then Alt Milk, 5, and Large Snack Co. are kind of the behemoths.
Right.
Which it's exciting that in the last 18 months they've been able to do this. Again, I think points to the attractiveness of this market, but also paints a potentially negative light from the competitive landscape. I love seeing for Smilk some of the word associations here.
Yeah.
Fun, delicious, premium. Like that sounds like a really good brand that
Right.
could be kind of the core tenants and assets that we could leverage for future growth. Again, this high customer satisfaction I think is only solidifying that. This might be bad right now, the fact that customer awareness is low, but if we're starting from a low base, I think there's opportunity that we could use to increase that going forward, which would help us increase sales, help us improve the market share that we have. And then the pricing difference is quite interesting as well. It looks like we're roughly kind of middle of the road, whereas there might be some upward potential from pricing that we see. Alt Milk has gained a ton of share. Yes, people do view it as overpriced, but maybe we don't go all the way to $6, but I think there might be some room, especially because we're seen as premium, and that's not a word association I see here. So maybe the willingness to pay for a premium product should be there. And so, again, I think going back to the math that we just did in terms of how to steal market share, this could be an avenue. And pricing is really exciting because it is a lever
Nice
that
lever.
is not in tension. It flows straight to the bottom line. And so with this, again, hypothesis, I feel even better about this asset after seeing this table. And I also feel a little bit better about the profitability target do we have any information on customers' willingness to pay or the potential to run a pilot in terms of to get some data of how high we could take prices without damaging volume?
That's a great question. Absolutely something that we would do and did do under the course of this. But one thing that I, would love to know quickly is as we think about deepening our insights and analysis for Foodco, and we know that they are fantastic in terms of building platforms and acquiring, and I think it was a comment that you made earlier as well, that they could start to think about that. Where do you think that they could go here in terms of their overall portfolio?
Yeah, so I think it was when we were looking at the market share map, like potentially a quasi roll-up strategy. And if I go back to the math that we calculated earlier, 18% total market share would help them get to that top line. And looking at this, alt milk 1 adding on would help us get there, and then these other 3 targets, if we were to incorporate them into Foodco's portfolio, that would help us to reach the target and exceed it. Obviously, it becomes the question of, are they viable? Are they up for sale? And again, all of the other considerations that we outlined in the original framework of like culture, how we would finance it, et cetera, come into mind.
And if they are, adding it to their profit profile overall or not.
That great point, because we don't know what the profitability of these companies look like. 20% share gain in the last 18 months, I imagine that came with quite a bit of investment, and maybe their margins look more negative.
Very likely. Well, this has been fantastic. I'd love to take a step back and just ask you, at this point, knowing we don't have all the information that we typically would have, where is your recommendation and your hypothesis at this point?
My recommendation to Foodco is that they acquire Smilk for the following reasons. 1, I think the alternative milk market segment is exciting, expected to double over the next 5 years. And second, I think Smilk, in terms of the assets that it is bringing, is a great platform to be able to grow and get close to the 6x profitability target. Customers love it. It's seen as a premium brand, and there's a lot of potential that we could tap into there, especially if we consider synergies that Foodco will bring. However, this recommendation is not without risk. Like I alluded to, the 6x profitability target is quite ambitious. We've run the numbers, and there's going to need to be both market share gain as well as improving profitability in order to hit that target. But understanding we might not get all the way there, I would love to, for next steps, start looking into different pricing strategies that we could employ in order to prove revenue, improve market share moving forward. And then there's always the ability to negotiate with Smilk on the acquisition price, understanding that their expectations might not be grounded fully in reality.
That's fantastic. Your rationale makes so much sense, and I'm so glad that you've highlighted some of the key considerations and risks, especially around pricing, because to give you a little bit of insight, this project was based off of a real case, and there wasn't a willingness to pay that higher price, so it made that profit target even more tricky. But you absolutely targeted the right next steps here for this project.
Awesome.
So very nicely done, and it was wonderful to meet you.
Yeah, thank you for working through the case with me.
Take care.
I hope this video has given you valuable insights into the mindset, the preparation, and the approach you can take to case interviews. I'd also encourage you to take advantage of the tips and tricks video that you can find on our YouTube channel or our website. And there's a lot of other resources at bain.com/careers to help you prepare for a successful interview process.